Hey guys, welcome to another Damilola Forex Academy teaching. In today's teaching, I'm going to be showing you all the art of technical analysis. I'm going to show you all how you can be able to apply technical analysis in the simplest way for the highest probability trades. So I'm going to be showing you all on a whiteboard, and I'm going to also be going over to the chart to use US 30 as an example to show you all how you can apply this proper technical analysis on any asset at all for the highest probability setups. Okay, so grab your pen, grab your book, and take note of every single thing I'm going to be talking about in today's teaching. Let's go. We'll start by talking about what technical analysis is. It's important to note that technical analysis entails using chart data to be able to predict the future movements of prices. Technical analysis is different from fundamental and sentimental analysis, as those other two require other things to predict the future movement of prices. But in technical analysis, we go onto our chart and we use the information strictly gotten from the chart to be able to predict the future movement of prices. Okay, so under this technical analysis, the most reliable form of technical analysis is known as price action trading. What does price action trading entail? It entails what? Using what? Historical and recent chart data to predict the future movement of prices. Okay, so price action trading is just a form of technical analysis, but with price action trading, we use what they call, a multi-timeframe approach and go from the biggest time frame down to the smallest time frame, and we coordinate all of these time frames together in order to get a high probability trade setup. Okay, so let's go ahead and write that out, that price action trading is the most reliable form of technical analysis. Okay, and price action trading is a very, very important and the most simple way of approaching technical analysis. Okay, so in talking about technical analysis and price action trading, we should also understand that you cannot go further without talking about chart structures, because what chart structures are the skeletal framework of prices. Okay, chart structure is the skeletal framework of candlesticks of prices. Okay, so let's go ahead and write it out. That what are these chart structures? Okay, it's important to note that chart structures are the coordinated movements of prices in the market. Okay, chart structures are the coordinated movement of prices in the market. Okay, so when a novice comes onto the charts, okay, and see prices moving, sees a coordination of all these candlesticks, okay, making movements like this, okay, the novice thinks that these are random movements, okay, but we as professionals know that these movements are not random, and these movements are making structures. Okay, they are making structures. Okay, they are not random movements. Okay, so chart structures are the coordination. Okay, they are the coordination of all of these candlesticks, all of those movements. Those are what we call what? The chart structures. Okay, they move in a likewise pattern. Okay, or in a likewise movement, known as what? Chart structures. Okay, and when we are talking about these chart structures, it's important to note that we have two types of chart structures. Let's write that out, that we have what? The two types of chart structures. It's important to note that we have the bullish chart structure and we have the bearish chart structure. Let's write that out, that we have the bullish chart structure and we also have the bearish chart structure. Okay, so these are the only two chart structures that exist in the market. Apart from these two, the only thing you can talk about is prices ranging, that is moving, on a parallel line. Okay, and when price is moving on a parallel line, there is no entry opportunity because price is not moving on a bullish sequence or on a bearish sequence. Okay, and money is only made when price is moving either on a bullish sequence or on a bearish sequence. Okay, so we'll start by talking about the bullish structure. What does this bullish structure entail? You know, what is found in a bullish structure? It's important to note that for a bullish structure, let's write that out, bullish chart structure. Okay, for a bullish structure, we can see prices make clear coordinations of higher highs and higher lows. Okay, so let's draw it out right here. Okay, we can see these coordinations here. These are clear examples of what a bullish structure are because price is making clear coordinations of higher highs and higher lows. For example, this high right here is an higher high because it's higher than this. This is an higher high because it's higher than this, and this is an higher high because it's higher than this. This is an higher low right here because it's higher than this. This is an higher low because it's higher than this. Okay, this one right here is actually an higher high. Okay, this is the lowest higher high right here that, you know, executed into this. Okay, so in general, for a bullish structure, it entails what? A coordination of higher highs, and higher lows. Okay, this is what it coordinates what a bullish structure. Okay, so now let's go ahead and write it that this particular one right here is an higher high because it's higher than this higher high. This is an higher high. This is an higher high. You know, let's take this as an high. Okay, so right here, this is a lower high. This is a lower high. Then this is a low. Let's take this as the lowest low right here. Okay, so this is a clear example of what a bullish structure is and you know what a bullish structure is and can be found clearly on the chart. Okay, so we are going to go over to the bearish structure to show you what entails or what is found in a bearish structure. The coordinations that make up a bearish structure are known as the lower highs and the lower lows. Okay, so these are the coordinations that make up a bearish structure. Okay, so this is a lower high right here because it's lower than the previous high. This is also a lower high because it's lower than the previous high. This is also a lower high because it's lower than this. And this is also a lower high because it's lower than this. Okay, so this is a lower low because it's lower than this. This is also a lower low because it's lower than this. This is a lower low. This is a lower low, and this is regarded as a low. Okay, and these are the coordinations that makes up a bearish chart structure. Okay, so that is the bearish coordinations of what? Of lower highs and lower lows. So let's also indicate right here that this is a lower high. This is a lower high. This is a lower high. Right here, this is a lower high, and this is regarded as an high. Okay, there's no high behind it. Okay, and this is what? A lower low. This is a lower low. This is a lower low. This is a lower low, and this is regarded as a low. There's no low behind it. Okay, so these are the clear coordinations that makes up a bearish structure. Okay, so with these coordinations and with the coordinations we just saw from the bullish chart structures, this is what makes up the technical analysis. Okay, once you are able to ride either the bullish structure or ride the bearish structure, you will be able to trade chart structures exceedingly well. The next thing we are going to be talking about is a break of structure. Break of structure. It's important to note that a bullish structure can become a bearish structure, and a bearish structure in turn can also become a bullish structure. Okay, and that happens when we see what we call a break of structure. Okay, so this is very important. First of all, before we go into that, it's important to note that a break of structure is what defines our entry. That is, we enter a trade when we see a break of structure. That is what gives us a go-ahead to be able to opt into a particular trade entry opportunity. Okay, so what do we mean by a break of structure? For example, we see prices make bullish structures like this, and price now decides to go ahead, and instead of continuously making higher lows and higher highs just as it has been doing, price now decides to what? To break the last higher low in this case. Okay, this is the last higher low right here. and this is a close below the last higher low. Now we would now say that what the bullish structure has been broken because price has now created a lower low right here. Okay, remember that right now this is now what, a lower low, because what, it is lower than the previous low. This would now be a low. Okay, so and this is now a lower low. Okay, so now in this case, when a lower low coordination start coming in, this now means that price is no more bullish and price is now bearish. Okay, and in that case, your job is now to tap into a bullish opportunity, a bearish opportunity. Look for a sell position by selling directly at the break of structure, or sometimes price can even pull back to create the lower high and now create another lower low. Okay, so in that case, this would now be what, a lower high, then this would now be what, an high, then this will now be a lower low to fully establish the bearish movement. Okay, but all in all, the bearish movement is confirmed as soon as what, prices closes and makes this low right here, which is lower than what, the previous low. Okay, so this is what converts a bullish structure to a bearish structure. Now, how about the other way? What converts a bearish structure to a bullish structure? Okay, if we see prices make, clear bearish structures like this, but instead of, continuously making the lower highs and lower lows, okay, prices now decides to do what? Price now decides to go ahead and break the last lower high. Okay, this is the last lower high right here. Prices now closes above. This would now mean that what? Price is no more on bearish coordination. Price is now on bullish coordination. Okay, by what? By making an higher high. Right now, this level here is now an higher high because it's higher than this, which now becomes an high. Okay, now price has now converted from a bearish structure to a bullish structure. So you can tap into your entry at the direct break of structure, or price can, come back to create an higher low, and you can tap into your entry when prices comes back to create an higher low right here to fully establish its bullish presence. Okay, so this is what we mean by a break of structure. Okay, so a break of structure, like I said, is what confirms our entry. After a break of structure, we tap into our entry at the break of structure, or we allow prices to come back, in this case to form an higher low, and tap into our entry when prices forms the higher low to ride the remaining movement. Okay, so now that we have been able to talk about the break of structure, the next important thing we're going to talk about is fractals. So what are these fractals in chart structure? It's important to note that fractals are the length of the exhaustion. In Forex trading or in technical trading, just like we talked about, after every push, there must be an exhaustion. After every push, there must be an exhaustion. This exhaustion is also known as the rest phase. Okay, after every push, there must be an exhaustion. Push, there must be an exhaustion. Push, there must be an exhaustion. Okay, it happens either in the bullish structure or in the bearish structure. Okay, so these are the movements of prices: push and exhaustion. Okay, so what are fractals? Fractals are the length of the exhaustion. Okay, so now fractals are the length from here to here. Is fractals are the length from here to here. Fractals are the length from here to here. These are the exhaustion from here to here, and what, from here to here. Okay, so fractals are the length of the exhaustion. Okay, it's now important to note that the rules of fractals state that what? One, okay, let's first of all write that fractals are the length of the exhaustion. It's also important to note that fractals are measured in pips. Okay, so if you want to measure fractals and what coordinate prices into fractals, you can use your measuring tool, okay, to measure the pips of each of those fractals. Okay, so now, what are the rules of these fractals? Rules of fractals. It's important to note that fractals has two very coordinative rules and very important rules. And the first rule states that what? A break of a small fractal does not affect the big fractal. Okay, so let me show you an example of that. If we see prices make structures like this, let's take this out. If we see prices make structures like this, okay, these are small fractals. Then we now see prices establish Okay, or let's do it this way. Price started from big fractals, then we now see prices make small fractals. Okay, you know, we are talking about the first rule, which states that what a break of a small fractal does not affect the big fractal. So now we have seen this break of structure right here. However, the break of structure only breaks the fractals that start from here. It has no business below here. Okay, because these are big fractals. If you see the length of this exhaustion and the length of this exhaustion visibly without even using your measuring tool are larger than these other ones. These exhaustions are smaller ones. Okay, so the break of a big fractal, the break of a small fractal does not affect the big fractal. Let's take it again. Okay, these are big fractals right here, and we now see prices make small fractals. Okay, and this small fractal is now the one that is broken. Okay, a small fractal has been broken right here. Okay, this means that our price is ready for a sell. However, the sell at 100% expires here. This is where the sell expires. At 100%, this is where it expires. Okay, it can come to the middle right here to around 61 points of the Fibonacci and take back off, but at 100%, this is where it expires. Now, eventually, if prices now breaks into this new fractal, that is what this last higher low right here has now been broken, price has created a lower low, then it now opens up a window of opportunity to as low as this level. Okay, so this is what we mean whereby we say what a break of a small fractal does not affect the big fractal. It is the exact same thing when it comes to the bearish structure. Also, we see price make, you know, big fractals, then we now see price make small fractals here, and price now decides to break the small fractal. Okay, when price breaks the small fractal, now it has opened an opportunity for us, but this opportunity at maximum ends here. At maximum, this is where it ends. Okay, at minimum, this opportunity can end at the 61.8 Fibonacci level, which is somewhere in the middle right here before it continues. But at 100%, this is where it ends. Okay, so now if prices now decides to break the lower high right here, okay, it has now provided an opportunity that at 100% can get to as much as this level. Okay, because price has now broken the big fractal. This lower high right here has now been broken by an higher high. Okay, so this is what it means by what? By the break of a small fractal does not affect the big fractal. Okay, so the break of a small fractal does not affect the big fractal. Okay, so let's go on to the rule number 2. This states that what? The break of structure, right? The break of a big fractal affects the smaller fractals behind it. Okay, so the break of a big fractal affects the smaller fractal behind it. Okay, so what does this mean? This means that what? If we see prices make structures like this, small fractal, small fractal, small fractal, then establishes a big fractal, and what? Prices breaks the big fractal, okay? We can see that what? This is a big fractal right here. If you measure the length of the exhaustion of here to here, if you measure the length of this exhaustion from here to here, is bigger than this, is bigger than this, and is bigger than this. However, okay, the rule states that what? The break of a big fractal, okay, affects all of the small fractals behind it, and at 100% opens up an opportunity that will send prices to as much as this level at 100%. Okay, at what? At minimal, a break of this structure here, we send price to the 61.8 of all of this move. Send price to the 61.8 at minimum, okay? While at maximum, it will send prices towards the 100.0 right here, okay? So it's the same thing that happens also when we are talking about, you know, the bearish structure. Price now establishes a big fractal right here, and the big fractal is now broken right here. This opens up an opportunity to as much as this level at 100%. While what? At minimum, it can open the opportunity to as much as, you know, the 61.8%. Okay, so this is what we mean when we're talking about the rules of fractals. The next thing we are going to be talking about is what? Is trading the flow of the market or against the flow of the market. Okay, if you are picking an opportunity and trading with the flow of the market, this means that what? You are trading in the direction of trend. Okay, so what does this mean? Okay, With our technical analysis, we do what they call a multi-time frame approach, okay? So we are going to go ahead and talk about the multi-time frame approach. Okay, so with the multi-time frame approach, we trade using what? A coordination of time frames, okay? That is, we trade using the monthly, the weekly, the daily, the 4 hours, the 1 hour, the 30 minutes, and what? And at minimum, the 15 minutes time frame, okay? So these are the multiple time frames that we use in what? In perfecting our craft and reading the price actions correctly. Now, trading with the flow of the market means that what? It means that all of these time frames are in sync, giving you an opportunity in the exact same direction. If all of these time frames are giving you a buy, it would mean that what, you are trading with the flow of the market, okay? That is, the monthly is telling you to buy, the weekly is telling you to buy, daily is telling you to buy, 4 hours, 1 hour, 30 minutes, and 15 minutes are telling you to buy. That means you are trading with the flow of the market. Okay, so now what are the rules that guides us trading with the flow of the market? Okay, for example, we take an opportunity. Maybe price starts on a bullish structure right here, and we see prices what? Break structure, okay? So when prices break structure and we are trading with the flow of the market, what are we going to do? We are going to exit at the lowest point right here of the break of fractal. We just talked about fractal. So we are going to exit at the lowest point at the break of fractal. We also call it the 100.0 Fibonacci. We are going to exit at the lowest point at the break of fractal of the broken fractal. Lowest point, let's write it out. Exit at the lowest point of the broken fractal. Exit at the lowest point of the broken fractal. Okay, so now this is it. Okay, so it's the same thing that applies to the bearish structure. Okay, if we see prices make movements like this, make movements like this, and we see what? A break of structure, okay? And the opportunities in the direction of trend, this means that what? You are riding the flow of the market, and what? Exit at the highest point of the broken fractal. This is your take profit. Exit at the highest point, exit at the highest point of the broken fractal. Okay, also known as what? 100.0 fib level. 100.0 fib level. Okay, that's what it is also known as. Okay, so this is means to what? To trade with the flow of the market. Okay, so that being said, what is the next thing that we are going to do? We are going to talk about what? Trading against the flow of the market. Okay, because what? The market gives us opportunity in the direction of trend, and the market also gives us retracement opportunity. Okay, so trading against the flow of the market. It's important to note that you can make money trading with the flow of the market, and you can also make money trading what? Against the flow of the market. Okay, because at the end of the day, after every push, there must be an exhaustion. Okay, so this means that what? Even that means you can make money, trading against the flow of the market by what? By trading exhaustions. Okay, trading those exhaustions that we talked about. Okay, so now bringing it into our multi-time frame approach, what does this mean to trade against the flow of the market? This means that the monthly time frame right here, okay, this means that the monthly time frame right here, the weekly time frame, the daily time frame are all pointing to one direction. Okay, let's make that clear again. The monthly, the weekly, and the daily time frame, which are the biggest time frames in the market, are all giving you one direction, and what? And the 4 hours, the 4 hours, the 1 hour, the 30 minutes, and the 15 minutes, okay, are giving you another direction. Okay, are giving you another direction. Okay, and it could also be a situation where what? The monthly, weekly, daily, and the 4 hours is what is giving you one direction, while what? the 1 hour, 30 minutes, and 15 minutes is giving you another direction. Okay, so that is how it is. It's not, it's not robotic. So it could be what that it is the monthly, weekly, daily, and 4 hours that are giving you one direction, and the 1 hour, 30 minutes, 15 minutes are giving you another direction. So like I said, it's not robotic. Okay, but this is the concept of it. Okay, so this now means that what you are trading what against the flow of the market. That is what all the big boys, the monthly, weekly, and daily, I've told you that market is buying. Okay, but however, the 1 hour or the 30 minutes or even the 15 minutes is now telling you that, okay, there's a quick sell opportunity. So now you can decide to trade that quick sell opportunity and make some bang with the quick sell opportunity, knowing that what you are trading against the flow of the market. Okay, so you now are conscious of the fact that it is a retracement that you are trading, and it doesn't last, too long, like trading the direction of trend, and you have to be cautious. Okay, so now in doing this, what are the rules in trading this? Okay, so now let's let's draw it out that if we see prices giving us this opportunity like this, we see a break of structure. If we see a break of structure, what are we going to do? Okay, in this case, unlike trading in the direction of trend where you trade to the lowest points where prices as where the lowest point of the broken fractal, what you are going to do in this case is that what you are going to trade to 50% of the broken fractal. Okay, that is what, just look at the broken fractal from the low right here, to the high right here, and instead of trading to the lowest point, trade to what, 50%. Look for 50% on your Fibonacci. I'm going to go ahead and show you that, or look for what, 61.8 or on your Fibonacci and trade to that level. So it's going to be a situation of exit at either 50.0 or exit at what, at the 61.8. Okay, 90% of the time price will get to 61.8 because the 61.8 is known as the golden zone, okay, in a retracing market. So 90% of the time price will get to as low as the 61.8. okay, so this is very important when you are trading against the flow of the market. Okay, so it's the same thing that applies to the bearish structure. If we see prices make movements like this, like this, and we see what, a break of structure, okay, what do? Okay, you are trading against the flow of the market. Look for 50.0. okay, you can bring your Fibonacci from the high points to the low point. Okay, where is half of this movement? Okay, all of this bearish movement, look for the half of it. Okay, and you can decide to exit at the half of it, which is at 50.0, or you can exit a little bit ahead of it, which is at 61.0 Fibonacci level. We can see the 61.8 will be around here, while the 50.0 will be around here. Okay, so I'm going to go over to the chart to show you the numbers I'm talking about right now. Okay, so this is the Fibonacci we were just talking about. Okay, and for the golden zone we talked about, that is the 61.8. this is it. Okay, and this is the 50.0, half of this movement, okay, that we talked about. So you can decide to exit at any of these two levels when it comes to a retracing market. Okay, so that means you should have taken your profit at either this level at maximum or at minimum this level. Okay, this level is the 50.0. this is the half of this movement. All of this bullish movement, this is the half of it, 50.0, while what, a little bit below the half, this is it at 61.8. so trading a retracement, these are the levels you should watch out for take profits. With all of this being said, this ends our work on the whiteboard. We would now fully go on to the charts to show you a live example using US30 to apply this very beautiful technical analysis system. Let's go. In applying this technical analysis, we start from what, the monthly time frame. Remember, we talked about using a multi-time frame approach. Okay, within that multi-time frame approach, we use what they call a top-down analysis. That is, we start our analysis from the monthly time frame and take it to as low as either the 1 hour, the 30 minutes, the 15 minutes to look for an entry opportunity. In fact, it could be the 4 hours that could offer us an entry opportunity. It 100% just depends. Okay, so what do we do on the monthly time frame and how do we kickstart? First of all, we come onto the monthly time frame and we try to see what structure overall price is on. Okay, this is US 30, and we can see that forever US 30, even coming to as much as 1977, US 30 has been bullish. Okay, you can see all of these movements. Even till this moment, US 30 has been on clear bullish structures. Okay, so what is the first thing we are going to do? The first thing we are going to do is what? Identify the real-time points where price is at. Okay, that is all of these levels right here. Let's just keep this at the high. That is the real-time points where price is at. Then the next thing is what? Let's read the structures that took prices to that point. Price has been bullish forever. Okay, so let's just go ahead and read the structures that took prices to that point. Okay, so the structures are clear bullish structures. Let's kick it from here. Like I said, price has been bullish from it forever, but let's just kick it from this level right here. This is around 2008. Let's just kick it from here to just identify the bullish structures. Okay, I can identify the bullish structure from 1977. It's all the same information because price has been bullish, so it's the exact same information even if you want to identify from 1977. Okay, then price now made this movement right here, push exhaustion. Then price made a big fractal right here. Okay, push exhaustion. Okay, so these are big fractals. Okay, so now separating the big fractals from the smaller fractals, this now becomes what? An higher low right here. Okay, one thing that is clear that we can see on the monthly time frame, like we said, is that prices is bullish. Okay, the price has been making clear bullish coordinations. Okay, so now after prices made this big fractal, what did prices do? Price added on small fractals. Remember, we say fractals are the length of the exhaustion. You can see how big this one is. You can't compare it to all these ones right here. Okay, in fact, this one right here is still bigger than this one right here, but either or, prices kept making bullish structures. Okay, in big or in small fractals, it continued making bullish structures. Okay, so now on the monthly time frame, this now becomes the last higher low. We can take this out right here. Okay, this now becomes the last higher low right here within fractals right here. This now becomes the last higher low. Okay, so it's just a situation that, oh, price has been making clear bullish structures. Okay, within big or within small fractals, it's been clearly bullish structures that price has been making without any iota of doubt. Okay, so the last higher low has been identified, the high has been identified. Okay, so now within this zone right here, since price is clearly bullish, okay, the monthly time frame is showing us that this window is bullish. This would now mean that what? Going down the small time frames, okay, if we are buying in the direction of trend. If we are selling a retracement. Just like we talked about, the big time frames determine what? If you would trade if the big time frames determine the overall direction of prices. Okay, and when you go on to the small time frame, if you are buying or if you are selling, if you are trading in the exact direction that the big time frame is showing you, that means you are trading in the direction of trend. If you are not trading against the direction that the big time frame showed you, that means that what you are trading against the direction of trend. Okay, so now, since we've clearly seen that the monthly time frame is bullish, so within this window, okay, within this window is our range of focus currently. Okay, all of these other parts below are currently not useful right now. Okay, within this window is our current range of focus. Okay, so now within this window, if we are buying the direction of trend, while if we are selling a retracement. Okay, so now let's take that to the weekly time frame to just look at prices within our range of focus. Okay, so that's what we need now, prices within what? The range of focus. Okay, so now within this range of focus, what are we saying? We can see prices make all of these bullish structures right here. Push exhaustion, push exhaustion right here. Okay, and prices continued with what? Smaller fractals, push exhaustion right here before making the push. Okay, so price is still, it has been clearly bullish, and we said that what? A bullish structure entails what? Clear coordinations of higher highs and higher lows. Okay, and prices has been clearly bullish, just as said. Okay, so now we can see prices make all these movements here. Push exhaustion right here, push exhaustion right here, push exhaustion right here. Okay, so now all of this movement right here, these movements are separate fractals, okay, to what is going on right now. So what are we going to do? I'm now going to take this low right here to as much as this level right here to read what? Opportunities within what? Within smaller range of focus, within this low right here and this high. Try to look for an opportunity within this window. Okay, we can see that what? Within the whole weekly window, price is clearly bullish. Okay, and after every push, there has been an exhaustion. After every push, there has been an exhaustion. Push, there has been an exhaustion. Push, there has been an exhaustion. Push, there has been an exhaustion, all within fractal. So now this is now the last higher low within that fractal, and we are now going to take this low and take this high right here to look for an opportunity within the confines of smaller fractals. Okay, so now we'll now take that to the daily time frame. Okay, so let's take that to the daily time frame. Okay, so now within the daily time frame, our fractals will now be a situation of what? Push, exhaustion, push. Okay, this level now becomes the last higher low. So our range of focus keeps slimming down. Okay, this level now becomes what? The last higher low within this fractal. Okay, we can see the low right here. It's a situation that prices made what? Push, exhaustion, push. This level right here now becomes the last higher low. Okay, so what are we going to do? In order to see a real-time trade entry opportunity, we're now going to take this window right here to what? We're going to take this window to the 4-hour time frame to try to look for an opportunity within this window, within what? Smaller fractals. Okay, let's take this above a bit and let's just take this below a bit so that you know our range of focus opportunities are very, very clear. Okay, so now let's go on to the 4 hours time frame to read the structures within the range of focus. Okay, so what is going on within this range of focus? Okay, we saw prices make clear opportunities of what? Of push, exhaustion. This is a separate fractal because after this, price started making small fractals. Okay, and the small fractals were push, exhaustion, push, exhaustion, push, exhaustion right here. Price made push, exhaustion, a bigger one, then prices broke structure right here. Okay, just like we said, this is what? This is the last higher low right here that prices broke. Okay, so now we said that what? Within this window, if we are selling, it is a retracement. We just talked about that. This means that what? If we are selling, the maximum we can sell to is the what? Is the 61.8 of the broken fractal. Take your Fibonacci from the beginning of the broken fractal, take it to the end right here, and your take profit is at 61.8 at the maximum. This is your take profit. Okay, let's read the structures again. It's a clear structures of push, exhaustion, small fractals, push, exhaustion, small fractals. Price made the bigger one right here, then made the biggest one right here. Then this is push, and this is where the clear break of structure happens. So you can slot in your entry at the break of structure, and it's going to be a situation, you know, you have to put your stop loss at the high right here. You have to hide your stop loss behind the high right here. Then take profit, hide your stop loss behind the high right here. Always hide your stop loss, you know, behind the high or behind the low. Then what? You know, our take profit would have been right here at 61.8 at 1.82, almost 1:2 risk reward. Okay, so in this case, you are getting almost 1:2 risk reward for this trade that closed in under a day. This movement was a movement that moved in under a day, and this was a very good opportunity of what? Of 1:8 risk to reward. Okay, so this is how to be able to what? To trade easily using what? This multi-time frame approach, and what you can be able to find what? A trade entry opportunity by just what? Putting prices into fractals, okay, in order to what? To see you know, a real-time trade entry opportunity. Okay, so now that this is over, what are we going to do? Okay, we are now going to what? Try to get what? A buy entry. Since the sell entry is done, price has gone to 61.8, which ends the sell entry. However, it's important to note that what? That sometimes prices goes below 61.8 only to correct back into 61.8. Okay, so any level between 61.8 to 1 right here, which is 100, any level right here is regarded as a 61.8 as a zone. Any of this level are regarded as 61.8 as a zone, and price can grab a support anywhere around there to take off to the top. Okay, I've taught my students in my mentorship program this several times, and they have been able to master it. Okay, so any level around there price can be able to grab a support and take off to the top. Okay, so what does this mean? This means that what? We are done with our sell opportunity, but anywhere around there, price can grab that support and take off to the top. Okay, so what are we going to do? Let's now take this bearish movement to as low as what? As the 1 hour time frame. Remember, we said all these levels right here, all these levels right here are key reversal levels. All these levels right here are 61.8 as a zone. Okay, so how do we get our entry points? Okay, for the next opportunity, since the sell is done, we are going to wait for prices to break this bearish structure right here of push, exhaustion, push, exhaustion, push, exhaustion. We can see the clear bearish structure. This is what I just taught you guys about structures. Okay, it moves in what? Either bearish structures or bullish structures. You can see that all of these are clear bearish structures. This is now the last lower high within that fractal. Okay, prices is currently around you know, a reversal level, and anywhere around there, price will come back and what? And come back and break into the 61 point. When price breaks into the 61.8, this will provide us our buy entry opportunity. So we can buy here, or we can wait for price to grab an higher low and buy when prices grabs this higher low, and you can now decide to ride prices to as much as this resistance point right here. Okay, because unlike when you are selling, now you are buying in the direction of trend. Okay, so now you can take profit at the highest point, okay, of the broken fractal. This is the highest point of the broken fractal, and you can take profit there. Like I said, it is also known as the 100.0 Fibonacci. If you bring your Fibonacci from the highest point right here and take it to the lowest point where it is written 1 right here, is also known as what? 100.0. So you can take your profit at 100.0 since you are buying in the direction of trend. Okay, so this is just one example of so many opportunities that market gives to us. Okay, and in our mentorship program, we've been able to teach our students using so many examples, and they have been able to understand how to break markets down into what? Into finding what? These opportunities. Okay, very, very briefly, let's go on back to the monthly time frame to go over this again, just for reiteration purposes. Okay, so this is going to be very, very brief. We said that what? On the monthly time frame, we can see prices on clear bullish structures. Okay, prices on clear bullish structures, right? So price has been making, okay, price had big fractals, and then price now went ahead again and now made what? Small fractals, push, exhaustion, push, exhaustion, push. So price is clearly bullish. Okay, so in order to see a real-time opportunity, what are we going to do? The higher low that we can see right here, okay, the most recent higher low that we can see, we are now going to take it and take the highest point right here to what? To the weekly time frame, to look for what? An opportunity within this window. Okay, so clearly, because price has been bullish, so we know that what? If we are buying, it's in the direction of trend, and if we are selling, it's a retracement. Okay, so now we are now taking this window to the weekly time frame. So on the weekly time frame, what did we see? We saw prices make what? Clear bullish structures also of push, exhaustion, push, exhaustion, push, exhaustion, push, exhaustion. Okay, so as we did, we're now going to what? Take the most recent low, in this case again, most recent low right here, okay, and now take it to the daily time frame in order to what? Look for an opportunity within smaller fractals. Okay, let's look for an opportunity within smaller fractals again. Okay, here we now saw prices make what? Push, exhaustion, push to this level. Okay, what are we going to do again? We'll take the most recent low again right here to look for an opportunity what? Within, okay, this window right here, to look for an opportunity within this window. Clearly, we know if we are selling, it's a direction. If we are selling, it's a retracement. Buying is in the direction of trend. So now, for an opportunity within this window now, we now saw prices within this small fractal. Price time with big fractals right here. They now took small fractals here. Push, exhaustion, push, exhaustion, push, exhaustion, push, exhaustion, push right here. Then all these resistance levels now trigger this break of structure right here. Okay, the last higher low was broken. Let's take all of this away. Then let's see clearly how what that the last higher low. Let's take these drawings away also. The last higher low right here was broken. Okay, this was the exact candlestick that broke the last higher low. Okay, instead of making higher highs as usual, this one made a lower high, allowing us to know that price is ready for a sell within fractal. So the situation, this was a fractal. Okay, push, exhaustion, push, exhaustion, push, exhaustion, push. Then this triggered the break of structure. Where can you sell to? The maximum you can sell to, since it's a retracement, if you are selling the retracement, the maximum you can sell to is what? Is the 61.8. Okay, and for that sell opportunity, this is what our take profit. So it's a situation of what? Of you selling right here. You selling right here, putting your stop loss just right above the high. Hide your stop loss just right above the high and take profit at this level for about 1:8, almost 1:2 on this opportunity. Okay, so these are we are able to break prices down and look for this opportunity. So we said now the sell is done, and right now we are going to be waiting for a buy opportunity to buy what? In the direction of trend. So what are we going to do? We went down time frames and we read what? The bearish structure that brought prices down. When we read all of the bearish structure that brought prices down, we now, are now able to say that, okay, we are going to wait for prices to break the last lower high right here. Okay, when prices breaks the last lower high, that will now offer us our buy opportunity, because price would have now broken back into 61.8. That will now offer us our buy opportunity. We can buy directly or allow price to come back and give us what, an higher low right here to form a complete bullish structure. So we can buy at either of those levels and buy in the direction of trend as at this level. Okay, so this is how to be able to apply the technical analysis and price action trading, and can work on any pair, on any asset, forex pairs, indices, whatever. Okay, and this is how we are able to use this to make high probability setups and high probability opportunities. Okay, so there's a link in the description below for those that are willing to learn and master this. Okay, I have a 2-month mentorship program where I take you all side by side in order to master this. And I also have my course. Okay, it's a complete course of all of these things. It is in both written and video formats, that will help you master this and become a master technical analyst. So link in the description below, and see you guys on the next video.